Hi all, it's a guy here, the unknown, and today I want us to look at something very important, and this is very simple. Remember guys, on this channel I only share two strategies. It's day 2 continuations and day 3. Day 3s are either going to be a reversal or a continuation. I'm going to explain everything as I always do, but guys, this is so easy. There is no need to complicate things, and the reason most people are not understanding this is not because it's complicated. It's actually because people are not putting in the work to back test it. Okay, on the playbook I put only one strategy. I went an extra mile to put it on a PDF format. Okay, I put in one strategy to make things easy so that you look only for one strategy. Go and backtest and master it. Yes, of course, now as you're starting, you're gonna miss these opportunities if you don't fully understand this, but the more hours you put in, the more work you put in, the more time you put into backtesting, you're gonna understand these things and they're gonna make sense to you. Okay, I share these things with you, but I backtest over 4 hours each and every day. So you can see how much work I put into this. Okay, this for me is already simple because I've put in a lot of hours into understanding this. That's why I'm sharing it with you guys. If you put in the work and backtest, you're gonna see this and understand this, because they are gonna throw multiple variations at you. Okay, these strategies are built on a very simple and strong psychology. Okay, let me show you. On this video, trading made easy and enjoyable, I shared all these strategies. It's only 2 strategies. I shared them in detail. Okay, if you watch this video, you will understand everything. Okay, it's a video that was posted a day before. This is one of the most important videos that I would advise you to watch over and over again until you understand, because it's simple. They pull you into one direction for 3 days. Let's go here. Okay, let's talk about this. Okay, there's no need to keep losing, guys. It's easy. Look, there's a psychology that says people are stubborn and they believe things on the 3rd attempt. So everything is built on this number 3. Okay, number 3. Why? Because people are stubborn. They are more likely to believe things on the 3rd attempt. So let me simplify everything for you. Say maybe you are here at your home. Okay, you are at your home personally. Okay, like think about this. Put yourself in this picture. Okay, and there's a shop over here. Okay, and you have neighbors over here, and you are sitting outside enjoying the sun. Okay, and this is a shop. Okay, this is a shop. Okay, and then as you are sitting outside, your first neighbor passes by. This is the first person. He passes by your house from the shop. Okay, say for instance he's carrying okay, people like beer. Okay, I don't drink this. Okay, but people like beer. Let me use an example of beer. Okay, of booze. Okay, this is the first neighbor who passes by your house carrying a crate of beer, and he says there's a promotion at the shop. They're giving each person 1 crate of let's say Heineken, okay, for free. That's a promotion that is being done by Heineken to thank the customers. Okay, so they are giving maybe the first 100 people to come a free crate of Heineken. Okay, you are gonna look at your neighbor and laugh. Okay, you're gonna think like, this is crazy, this is a joke, right? Put yourself in this picture. Okay, put yourself in this picture. You're gonna say, oh no, this is a joke, and you're gonna laugh over it, right? Okay, let's say now a second person passes your home holding booze. Okay, this is the second person, and repeats the story that the first customer that your first neighbor said. Okay, these are your 3 neighbors. Okay, 1, 2, 3. Okay, this is your second neighbor. He's holding booze and he's telling you the same story. Hey, there's a promotion from Heineken. The first 100 people to come to the shop are getting a free crate of Heineken. You're gonna it's gonna click. Okay, this looks like real. It's real. Okay, is this even real? Okay, you're gonna start thinking about it, but you are most likely not gonna jump and go to the shop. When the 3rd neighbor passes holding a crate of Heineken, and I don't know. I don't drink. I don't know if it's sold in Apex or Heineken or crates. Okay. Let's say this person passes your home and he's holding a crate of Heineken and he repeats the same story the first person said, the same story the second person said. Okay. Now, obviously, without thinking, what are you gonna do? Obviously, you're gonna jump and go to the store. Okay. You're gonna jump and go to the store. This is human nature. This is human behavior. The number 3 is a very strong psychological number. It has been proven by multiple researchers. Okay, so market makers use this number against retail guys. Of course, already we know that 90 to 95% of retail guys are losing. Okay, that's how it has been ever since the market has been established. Okay, why? Because the main objective of the markets is to take capital from each and every retail guy and give it to few people. I believe those few people are world leaders, people who control economies and people who control the world. Okay, I believe they are the ones who own the market. Okay, in this case, I'm not talking about hedge fund as market makers. I'm not talking about banks. Those guys trade long term. Okay, they don't open position every 30 minutes and close it every 30 minutes. Why? Because those people trade fundamentals. Okay, we are talking about the real market makers who are considered market manipulators. They're the ones who send you down reverse. Okay, if you look at the best guys in the world, people like Peter Brandt, people like George Soros, those big guys, they do not trade intraday. Why? Because they say intraday it's all about manipulation. Okay, they don't like the intraday thing because it's manipulation. But for us, it's something we understand, most especially after understanding the number 3, which is a very important psychological number. So I'm explaining all these things so that you understand the psychology behind this. Please stop making things complicated. Okay, and this is a second reason why they use the number 3. We know that most people rely on indicators. Okay, first of all, it's human behavior. Secondly, it's indicators. All the indicators that people use are lagging. Okay, all the indicators that people use are lagging, and as lagging indicators, they show the underlying trend late. Say for the first day, prices are going up. Okay, the second day, prices go up. The third day, on the third day, that's when most indicators will be showing you that, oh no, this is an uptrend. Okay, and people using indicators are more likely to jump because they are relying on the indicators to make a decision. Okay, so when indicators show them that it's an uptrend on the third day, that's when market makers, manipulators will be ready to punish. Why? Because obviously, if 90 to 95% of people are losing, that simply means there has to be some strong manipulation, because it's market makers who are taking this capital from every retail guy. Remember, for someone to buy, somebody has to sell. For somebody to sell, somebody has to buy. And in this case, it has to be market manipulators. Okay, when we are buying, we are obviously buying from them. Okay, this is why I always say they show. Okay, they trap. And trapping is all about them gathering orders. They cannot sell or buy their whole orders at once. Why? Because they are dealing with retail guys. Retail guys have limited resources. We all have limited resources. Remember, it is said that it takes 10,000 lots. Okay, 10,000 lots. Okay, 10,000 lots to move the market 1 pip. Okay, that's something you have to understand. So you see, if it takes 10,000 lots to move the market 1 pip, imagine the limitation that retail guys have. We as retail guys have limited resources. Okay, market makers do not have limited resources. They are the ones who make the market. So we must understand that, okay, we have to give them an opportunity to make the market, then get everybody to open orders, then they are going to punish those orders. We want we want to enter when we already know that they have trapped volume. This is the most important part to us, okay? Because once they show trap, they are gonna go back reverse with people's capital, okay? Remember, we are short-term guys. We are not long-term guys who, for instance, open one position the whole year, okay? If you are actually a long-term guy, obviously you will be relying on economics, fundamentals, the country's economy, okay? Because that's what will drive prices in the long term. But if you're a short guy, what you do as an intraday guy or a swing guy, what you do is you wait for them to trap, because you know, guys, it's retail guys, okay? Retail versus manipulators, market makers, or market manipulators, whatever you call them, okay? This is all there is, okay? This is all about retail versus market makers, okay? So you know that if they show, and when all the retail guys are in the market, obviously they will have to punish them. That's how they block or book their profits, okay? I'm trying to make things easy for you. So you see, we have two strong reasons why we follow the 3-day setup or 3-session setup, okay? So if you look at this video, guys, I explained almost everything, okay? That's why on the playbook I used only one setup, the day 3 setup, because I want people to understand it, master it, and rinse and repeat. Take the same thing over and over again. So here's another important thing you should understand. This is another important thing you should understand, okay? It's about variations, okay? Variations, okay? It's about variations. Why? Because remember, it's retail guys, okay? Retail guys versus market makers. So if these guys, they are the ones who move, they are the ones who make the market. So if they do the same thing every day, what's gonna happen? These guys are gonna cram them, okay? Retail guys are gonna cram them. Okay, this is how they do it. It's 1 2 3 on the third day they reverse, okay? 1 2 3 on the third day they reverse. So they have to use a number of variations to confuse people. That's why sometimes they will say day 1, day 2, day 3, and then they will continue, okay? They might actually continue for another 3 days and then punish on the 3rd day. That's why if prices keep going up, what do? You recount 1 2 3 again, okay? This is why they use variations. And in this video I try to explain different variations they're gonna use, okay? So today I'm just gonna show you 2 variations that they use, okay? And then we're gonna go back to our charts, because guys, these moves are something you must get when you understand this concept, okay? There's nothing hard, there's nothing difficult, everything is easy. You see these big moves, these are given moves, easy, okay? This is the setup I put in the playbook. Easy, okay? Don't complicate things. I said preserve your capital. That's all you have, okay? If you lose it, you're out of the game. Preserve it. Only open on the 3rd day or on day 2 continuation if you are using what we share on this channel. It's only that. Easy as that, okay? Easy as that. Let me show you something. Okay, okay? I did explain everything, guys. Go and watch this video, please bookmark it, watch it over and over again till you understand it. For those who have the playbook already, you know, I put one setup and I tried to explain it, and I tried my best to explain it, okay, in a PDF format, okay? So this is what I'm saying. The playbook is in the description, okay? It's in the description. Let me show you this, okay? It's gonna make this video a little bit longer, but please bear with me because I'm trying to explain things here, okay? So this is day 1, okay? Let me just use these days quite quick. I'm gonna try to show you this because, guys, they are very easy trades out there that are not supposed to be missed. It's not acceptable if you have put in hours of practice. If you're still new, it's acceptable to miss them, okay? But guys, once you put in the work, understand that it's not gonna be the same thing day in, day out. There's gonna be a lot of variations. That's the most important thing. Understand that, okay? So this is our week, okay? And we're gonna break down our week into 5 days, okay? This is day one, okay? And something you must understand is that sometimes the day one will start the previous week, day two might be the previous week, and Monday might be the third day. So that's what you have to understand, okay? It's not always gonna be Monday as the first day, okay? Yes, on a weekly template that is the case, but now it's different setups, okay? It's different setups. When you follow the setups, you must understand. On this one, I'm talking about day one, day two, day three, not where I'm saying every day one is gonna be on Monday. No, sometimes the day one will be on Thursday, Friday will be day two, and Monday will be day one, and then it will continue, okay? I'm not talking about on the week itself, okay? Or yes, I'm not talking about the weekly template itself, okay? That's a different setup all on its own, okay? So this is let's say this is day 4, which is gonna be our Thursday on this week. So guys, treat this as it could be different weeks, it could be the same week, okay? That's why I'm not saying Monday, Tuesday, Wednesday, Thursday, Friday. No, I'm saying day 1, day 2, day 3, day 4, day 5. It could be like Thursday, Friday, Monday, or it could be Monday, Tuesday, Wednesday, or it could be Tuesday, Wednesday, Thursday, okay? But one thing to be understood, this is one of the variation, okay? This is one of the variation, okay? Please pay close attention now. They can drive prices down, okay? Down the first day, okay? And then they pull back, give a day to continuation. I'm not talking about it right now, okay? And then let's say they drive prices down the second day, okay? And maybe they pull back and drive prices down the third day. Now we have day 1 of prices going down, day 2 of prices going down, day 3 of prices going down, okay? On this day, they might just, okay, close people from this day and then reverse. You understand this? This will be a first green day, okay? This will be a first green day. So this is a different variation where they take the people down day 1, take people down day 2, take people down day 3, and they reverse the next day, okay? The next day, okay? So this is something to understand, okay? Let me erase, okay? Pause and take notes of that, okay? So there is another variation. Now this is another variation that they can actually use, okay? They can take people down day 1, take people down day 2, okay? And then give an inside day on the third day, okay? Which of course many people might say it's a first green day, okay? But in this case it might not be. And then the next day they might take prices up and come and drop prices, okay? And on Friday they might just reverse, okay? We are not market makers. We are not trying to catch all these moves because they have to make the market. We must understand that they have to trigger people to chase moves, okay? As you see, take people down day 1, take people down day 2, inside day, take people down day 3. Indicators are saying this is a downtrend, and that's when they reverse. This is a second variation that they can use where the third day became an inside day. Now let's look at something else again, okay? Let's look at something else again, okay? I will use only at the down direction, but you can just flip them, okay? Because I don't want this video getting too long, okay? Day 1 down, day 2 down, and let's say day 3 they break out and they reverse on the third day, okay? This is another variation, okay? This is another variation, okay? Okay, pause, and you can just copy it. Okay, this is another variation. This is the third day. Take prices down day 1, take prices down day 2, take prices down day 3. So here the most important thing is, how are they taking prices? Where are they taking prices there? Are they pulling people down? Are they showing people that this is a downtrend so that they can punish? Okay, we are short term guys, we have to understand this. For long term guys, they don't care about all this day manipulation and stuff, because you find that, okay, they have bigger targets. They have one position. Okay, they can open a position, hold for 6 months, and their target is obviously based on price action, but the move or or what's gonna drive the price in their case, it's gonna be fundamentals. For us, it's manipulators. We have to understand manipulation. Okay, so let's see another variation. Okay, I've given you roughly 3 variations right now. Okay, these are the 3 variations. Okay, and now let's come and look at another variation. Okay, this is where they drive prices down. This could be a first red day, and then the next day they give an inside day. Okay, and then the following day they go down and take prices down. This is the second day of prices going down. Okay, and that's when sometimes obviously they can give another inside day. They are patient, they are not rushing to anywhere. It's only retail guys who are rushing. Okay, they can give an inside day, and then on Friday they can give something like this and punish. Okay, if they don't punish, they can still wait for the next day to punish. So it's not like this is Monday, this is Tuesday. No, I'm not talking about the weekly template. On the weekly template, that's completely a different setup. Okay, that's a different setup where Mondays day 1, Tuesdays day 2, Wednesday day 3. That's a different setup. On this one, I'm taking about 3-day setup where they're taking people down, taking people up for 3 days, and then punishing on the next day. Okay, this is a 4th variation, highly possible. They can do all these things. Okay, or else they can take prices down. Okay, take prices down. Day 2, give an inside day. Day 3, take prices down. And day 2, this is the second day of taking prices down. Why? Because this day they did not take price, they didn't break the high, neither the low was broken. Okay, and then now it will be on the 4th day they break down, and now day 1 taking people prices down. The second day was an inside day obviously, and then the 3rd day it was a day 2 of taking prices down, and this was the 3rd day of taking prices down, and then they can reverse on this day, or else they can reverse the next day. Okay, they can trap and reverse the next day. That's another variation. So if you look at these things, they could have over 6, 7, 8 or more variations. Okay, so it's about understanding that they are not gonna throw, or they are not always gonna say 1, okay, pull back 2, pull back 3, and then punish on this day later, maybe if there is news or during the US session, or else wait for the next day, which is quite common. You see, it's all about variations. Oh no, sorry. If you look at these things, it's all about variation. However, it's not going to be day 1, day 2, day 3 punish always. Why? Because if it becomes easy like this, okay, we know the psychology remains the same, but if it becomes so easy like this, okay, today they took prices down, tomorrow they took them down, tomorrow they took them down, and then they punished. Sometimes they're gonna give it perfect like this, okay, but not always. Why? Because if they give it always like this, then the 90 to 95% of people losing is gonna actually change. And say, for instance, if we get 50% of people losing and 50% of people winning, retail guys, obviously the markets will not serve their purpose, okay, because these guys are greedy. They want to win alone. Okay, so that's something worth understanding. Okay, that's something worth understanding. There's gonna be a lot of variation, however the psychology remains the same, and most of the time it's gonna be day 1, day 2, day 3 reversal, even though sometimes they will throw something like this. Let me just show it right now. Okay, for time's sake, I'm gonna use only one direction, of which I've already started this down. Okay, sometimes it's gonna be day 1 prices going down, day 2 prices going down, day 3 prices going down, day 4 prices going down, day 5 prices going down, okay? And then you'll find that, okay, the whole week prices go down. If this happens, they are more likely to use the upcoming 2 weeks to come and punish all the liquidity that they created throughout the week, okay? Oh, sorry for that, okay? Sorry for this line. You know what? Sorry for this line, okay? And this line, okay? So if prices go down the whole week or 2 weeks, they are going to use the upcoming weeks to reverse. It's all about dumping prices, okay? And then pumping them, okay? This is all there is to this. Take prices down, reverse them. Okay, because when they take prices down like this, there's a lot of people selling. So that actually leads to accumulation of many orders. Okay, then they punish. As short-term guys, this is what we have to understand: manipulation. It's also gonna happen on the day itself. But guys, remember, if I'm gonna explain everything that happens on the days and everything that happens on the day itself, it's gonna take a long video, and most people don't want long videos. Okay, it's just a surprise to me because this is the hardest industry and people want to learn in 15 minutes. Okay, I don't know, maybe when it comes to things that are easy that people can do for themselves, they think those things should be like easy. They don't want to spend most time learning. Okay, however, if you were doing a degree or something, you were gonna spend roughly 6 or more years or 4 years to get that qualification. But that's a mindset. Okay, anyway, personally for me, I don't mind. I put in a lot of hours into learning. That's something about me. I don't mind. I want to learn something in 15 minutes, then I think I understand. No. Okay, so guys, we've explained the variations that they're gonna throw at you, okay? And on this video, of course, that's where I shared everything. Bookmark this video and watch it again. Trading made easy and enjoyable one day ago. This is one of the most important one, okay? And again, on the playbook, this is obviously the strategy that I've shared, but I put it in a PDF format and tried to put in the rules and everything I personally look for, because on the playbook I put my own playbook that I use each and every day that I trade with. Okay, so guys, just to understand that, okay, so now let's go to the charts and look at what we have been talking about, because this was a very beautiful trade that I took yesterday, and even the day before, it was on Wednesday, we had beautiful day 3 moves. But remember, variation. That's why I always say go and put in the work, go and backtest, because when you put in the work, when you start backtesting, that's when you're gonna understand all these things. There's a lot of variation. It's not gonna come as easy as you want it to be. Okay, so as we've already said, we have to identify key levels. Okay, this is the closing price of the previous week, because this happened starting from last week. It happens almost every week. Okay, and almost every pair, one pair, if you're following a number of pair, one pair will give you this setup at least every day, or you might find that 2 pairs are giving you this setup almost every day. So this is why mostly you will have at least 2 pairs or 2 trades per day. Okay, I did share my trading rules in the video that I've just showed you. Okay, so literally I share with you everything I use. Okay, so yes, you see, if you look at this week, guys, this is so easy. It happens always. Okay, let me start from here. I'm gonna show you roughly 3 days, 3 consecutive weeks where this was happening. Okay, you see here, prices are going up. Okay, prices are going up. All of a sudden prices go down. This gives a first red day. Okay, and the moment they broke the next day, this becomes a peak formation, and we know peak formations are what? Peak formations are day 1, because this was an inside day from this day. But look at it, the moment we shared this over and over again. Okay, the moment they break this day here, this is the next day, they break the low of this day. Okay, this became a day 1. This became a day 1. Okay, there's gonna be a lot of variations, guys. I've talked about the variations. Okay, this is gonna be day 1. This is gonna be day 1. Okay, this is gonna be day 1. Day 1 of prices going down. Okay, day 1 of prices going down. Okay, and now we have day 2 of prices going where? Down. Okay, this is day 2 of prices going down. Okay, Okay, day 2 of price is going down. You come this day, this was a day 3. Okay, and people are gonna say, we don't see these things. You'll not see these things because you're not putting in the work to backtest. If you put in the work to practice and backtest, you're gonna see these things each and every time they appear. And there's no need to be chasing moves. The only thing I look for, day 2 continuation. Did they give it day 1? Did they pump? Boom. Okay, that's what I look for. But obviously you mustn't enter blindly. Hence why I shared everything, what to look for on this video, trading made easy and enjoyable. On this video I shared everything, what to look for on the day itself. Okay, because I went an extra mile of actually, first of all, let me show you. First of all, I shared my trading rules with you and I explained them in detail. Okay, I look for 50 pips, maximum 2 trades a day. This is what I do. 2 strategies I look for, day 3, okay, and day 2 continuation. Okay, this is all I look for. This is all I analyze for. This filters out a lot of garbage. This makes things easy. That's why I'm saying on this video I shared a lot of things. Okay, let's continue. I want to show you something. Okay, on this video. Okay, you see on this video, I even made this this flow chart, and I explained the day 3 and I explained the day 2 on both sides, what to look for on the day. So this is one of the most important video. Master it. I repeat, master it if you want to understand everything in detail. Okay, and here I shared both strategies. On the playbook I only shared one strategy so that you understand one strategy, and that's how I take it. Okay, that's why I put it in the playbook, but I share everything with you on this channel. Okay, so you see, day 1, day 2, day 3, punish on the 3rd day. Okay, easy. Okay, easy. If you didn't get this day, it's still fine, because if you come to a smaller time frame, that's when you'll see the trapping. Okay, the trapping, because we need to see them trapping and sending people down. Remember, this is an hourly time frame. If you are on a smaller time frame, you would have seen this. And remember, these pairs moves well in it's pound Aussie dollar. It moves well during the Asian session because of the Aussie dollar, which moves well during the Asian session, and it has the pound. It also moves well during the London session. So you see, this was a day 3. They did the same. Okay, this was a perfect day 3 where they take people down 3 days perfectly. Okay, now let's look. This became a day 1. Okay, because you can see the next day they broke here. Okay, so we do not counter trend this. This became a day 1, day 3. When you get it and when they reversed, it becomes a day 1. Okay, and now this became a day 2. Oh, this was so beautiful. Okay, it became a day 3. Okay, it became a day 2. This one is a day 2 continuation, but it wasn't a continuation for me because it didn't dump. Okay, however, look at this. This day here didn't break the high, neither the low. What do we call this day? We call it an inside day. Okay, this becomes our in day. This is an inside day. Okay, this is an inside day. What did we talk about? We just spoke about the variations. It's not always gonna be perfect like this. They give it perfectly. What do you think is gonna happen if they again give it perfectly? Obviously, retail guys are gonna cram them, so they have to trick and use variations. Okay, nothing difficult. Okay, inside day. Let's look at the following day. Okay, don't lose count. Okay, don't lose count, because every move is well calculated and timed. Okay, don't lose count. If on the 3rd day they continue going down, don't lose count. There is no coincidence, there is no mistake. Every move is well calculated and planned. Okay. These guys are well organized. Okay, and if they have employed algorithms, then those algorithms are perfect and they are actually behaving according to the way they've been programmed. So when I say these guys are well organized, if it's an algorithm, it's fine. Still, an algorithm executes based on the codes, and the codes are instructions. Okay, so obviously it's all based on what they've been programmed to do, and they use the number 3 because we have explained that it's already a psychological number. Look here, we just said sometimes they'll take prices day 1 up, day 2 up, given inside day. Yes, sometimes they will come and break this high over here, okay, on the 3rd day, but sometimes they are not gonna do that. Why? Because remember, we spoke about the fact that we as retail guys have limited resources. They as market makers are not limited, and they don't have limited resources. However, they have a huge limit, which is they cannot place their whole order at once. They have to open in portions. And if you look at this on a 1 hour time frame, so perfect. This is a shoulder, okay? This is a shoulder, which makes more sense why they didn't come and break it. This is a shoulder. This is a head. You see, this is a pattern. I spoke about patterns in one of my videos, okay? If you watched it, you understand the patterns, okay? Because I can't keep repeating the same things if you are not following, okay? So look at this. This is a shoulder, head, shoulder. This is a trapping pattern. It makes sense why they didn't come back. But funny enough, on the 3rd day, what did they do? They came and closed everybody from the inside day. So sometimes they're gonna do this. This is a different variation, but it changes nothing. If you understand day counts, if you look at the video I posted yesterday, on Thursday, more than 4 or 5 pairs did this. They gave this variation where prices are taken up day 1, prices are taken up day 2, they give an inside day, and the following day they close the inside day, okay? They close the inside day, and then prices collapse and fall. On a smaller time frame, you will see the trapping, okay? This pair moves well in Asia and in London. That's where you see it was just a blow off for the whole day, and they came and closed everybody from roughly Monday, okay? So day 1, day 2, inside day 3. The previous week they did what? Day 1, day 2, day 3 perfectly. The next week they do what? Day 1, day 2, inside day 3, okay? Same thing, but different variation. And when I see this candle, I love this candle. Why? It simply means they use the whole hour, okay? And they literally did nothing. On the last hour of the Asian session, they held prices. So they used the big candle to chase people up, another candle to take people up, and then what did they do? They held the level. Everybody going up on this candle is trapped and never to be released, okay? So I'm not going to talk about the candles. I'm not going to go deeper into that, okay? But this was a day 3. When did it happen? It happened on a Thursday. When did this day 3 happen? On a Monday. So that's why I told you that do not actually look at don't look at these days as Monday, Tuesday, Wednesday. I'm not talking about the weekly template. That's a different strategy on its own, okay? On this strategy or on this setup, I'm not following like the weekly days. This could be a Wednesday, this could be a Thursday, this could be a Friday, this could be a Friday, this could be a Monday, this could be a Tuesday. But understand day count. That's the most important thing, right? Okay, now let's look at this at what they did, okay? They took prices. This obviously, this became a day 1, okay? This became a day 1, and this became a day 2, okay? That's where they ended. They didn't continue to give a day 3. Fine, it's gonna happen. Why? Because they're not obligated to give the same thing over and over again, because people are gonna cram them. But look at what they did. They came and engulfed both levels, the low and the closing price of the previous week. That's why these levels are important, okay? That's why these levels are important. On this day, they came and closed people just above the high. That's where they collapse to the low, okay? So we draw these lines on the weekend, okay? We draw these lines on the weekend. Even for this week, we have to draw the lines, but let me just continue since I'm showing you the day count. But the levels are important because they'll help you get the entries, okay? So let's look at this. Now, what did they do? What what did they do? The moment they break the next day, they broke the high of this day, okay, of this day too, okay, and they kept prices going and going, okay. They kept prices going, okay. Let's look at this. Let's see what they did, because guys, this is not rocket science, okay. This is not rocket science, okay. They gave okay, this one, they took prices up, okay. Now let's look at what they did. They took prices, this became a day 1 and this became a day 2, okay. Let's mark our days. This became a day 1. When does it become a day 1? When they broke this level here. We are not counter trending this move. Why? Because they broke the high the following day. So literally this became a day 2. But here's something else. The following day, what did they do? They broke this high. So they will do what they want. That's why we don't always have trades every day, and that's why we follow a lot of pairs, okay. So some days won't be tradable, okay. But let's look at what they did. This was a day 2, and then the next day they gave a day 1 because they broke the low. They broke the low. They didn't just pin the low, okay. They broke the low. They didn't give an inside day here. They broke the low. This is day 1, okay. This is day 1, okay. There's gonna be a lot of variations that you have to understand, okay. Now let me delete the previous week's levels, okay, so that we can put our new levels, okay. This one obviously becomes the previous week's closing price, which is good. We're just gonna throw it through because we still need this one, and we're just gonna change the color to dark green, okay, because I use different colors. This works well for me because I'm able to see this level, and this low changes because on this week now the low comes to here, right? Yes, it's correct, right? Yes. And then where was the high? I deleted the high. I'm crazy. It's fine. Okay, I deleted the high, right? So this one I'll just pull it to the high of the previous week, and then we're just gonna draw it through because these lines or these levels must be available to the end of the week, okay. Today's Friday. Yes, we can still keep them, okay. I'm sorry the video is becoming long, but anyway guys, I have to share things with you, okay. When you want me to make short videos, then you force me to explain less things, okay, and leave things incomplete, okay. So if you look at this right here, okay, if you look at this right here, what do you see? These are our levels coming to this week, okay, okay. We have the high, we have the last week's Friday closing price. As you can see, prices closed there. How do you see this? Obviously we are using this indicator. It's in the description as well, okay. It's in the description. You see, this is where it printed the previous day's closing price, and if you are coming on a Friday and we have the previous day's closing price here, then it means it was the closing price of Friday, okay. It was the closing price of Friday, okay, fine, good. So now we have our levels, okay. This was a day 2. You see, day 1, day 2, okay. Again, when this breaks, we mark this as a peak formation. This is day 1, this as day 2, okay, day 2, okay. I don't want to confuse you guys. This as day 2, and then what happens? The next day they give us a day 1. They broke here, day 1, okay. They broke this low, day 1. The following day, what do? They break again, day 2, okay. They break again, day 2, okay. What do they do here? They break again, day 3. So we have day 1, day 2, and we have day 3, okay. I will show you something. On Wednesday, I didn't take this in terms of this this setup that I'm sharing right now. Why? Because this was not an inside day. This literally broke, okay. This literally broke. It was not an inside day, so I just do my day count, okay. So yes, it did behave according to some pairs that were on a day 3 on Wednesday, but on the weekly template it was day 3 anyway, okay. But on this based on the strategy, I'm doing my day count, okay. So this is day 1, they broke here. The following day they broke this low, okay. This becomes what? this becomes day 2 based on the behavior. Okay, but they broke here. No, they didn't really break. This is a rare track where they only came to close people from the inside day. When you put in more hours to practice, you'll start understanding this. Okay, day 1 they broke the low, day 2 they broke the low, day 3 they broke the low. So 3 days of breaking, they are different. Okay, this is another variation. If you are looking for something perfect, I'm sorry, they use different variations. And you see, yesterday we were on a day 3 for this one, because here it didn't just do something like this. Okay, here it broke and spent some hours under here, so it broke down. However, yes, it did bounce on the level. Okay, for those who needed an entry, it did bounce on a level, including here it bounces on this price and on the high. Everything is from the level. Okay, so yesterday this pair moves well in Asia, and it also moves well in London because of the pound. So look here, how perfect and simple this is. You are coming on a day 3. It's all up to you how you do your day count. You are coming on a 3rd day. Okay, remember, my day count is based on the fact that this one did break and spend hours here. So this is a breakout to the downside. It's not a stop hunt. This is a stop hunt. They are up and they are down. Okay, they are up 15 minutes, they are down the next 15 minutes. Okay, so this literally was just like a stop hunt. Okay, even if you come to an hour time frame, you see they're up, they are down. When you come to a 15-minute time frame, you will realize they are up, they are down. So this was literally just a stop hunt, coming to stop people from here. Okay, if you understand stop hunts and levels, they engulf both levels. Obviously this was a good setup on a day 2. Okay, so coming to yesterday, we were on a day 3, and look, they're sending people down on a 15-minute chart. When you squeeze it like this, what do you see? Personally, for me, I see a nice pattern, which is a shoulder. Okay, shoulder, okay, shoulder, okay, head. And for me, it's not about bragging, I got this one. No, that's why I actually went deeper and took the whole hour to explain how you should get these trades. For me, the most important thing is understanding the psychology. You see, this is a shoulder, head and shoulder. Okay, okay, but for those who say it's a triple bottom, still again, it is a triple bottom. Okay, it's up to what you understand. Okay, because I always say make these things your own. Okay, so this is a shoulder and shoulder, or a triple bottom. Okay, and we did speak about the fact that we wait for a stop hunt. Okay, and I don't trade before the equity opening time. So I came to a 5-minute. Okay, I came to a 5-minute when I saw all these things happening on a bigger time frame. So when I came, okay, let me pull this up. When I came on, it's not gonna be visible. When I came to a 5-minute, okay, when I came to a 5-minute, I noticed something very important. You see, okay, you see, of course, this candle here, let me zoom it out. This candle here opens the London equity time. Okay, I don't trade before the equity opening time. Okay, because I know they are likely to throw a stop hunt when the equity opens. So when you look at this, okay, when the session began, before the session began, they were able to take these guys out. Okay, and you have to understand the psychology behind a head and shoulder. It's that they send people down, they trap them, they come down, they do not release people trapped here. Okay, that's the psychology behind a head and shoulder. But what gave me confidence to enter this trade was actually the fact that, okay, you see, this is the equity opening time, and what did they do? They closed people here. So literally everybody who entered on this London session was closed by this candle, and then it went up. Okay, and not only that, the equity time is opened, right? Patience, remember this point, patience pays. The equity time is opened, and they give an engulf right back into the 20 EMA. 20 EMA. Okay, they give a engulf. So guys, this is an engulf. Okay, you don't have to catch the low. Okay, being late on your entry, Jesse, I posted a short video yesterday. Jesse said, being late on your trade simply means you waited for the confirmation, and now that's your assurance that you are right or wrong. So now when they give this engulf, this is the cleanest entry. I took the entry here. I didn't wait to take the whole move because I have my own rules. So you see where I took the entry. I took the entry here on a 5-minute candle. On a 5-minute candle, they engulf. Guys, it's all about the stop hunt. This is a stop hunt. It closes people from here. Understand the psychology behind the head and shoulder. Send people down, trap them, send people down again, but don't release the ones trapped here. Why? Market makers are not able to sell all at once. Yes, sometimes they will come and close everybody else before they go, but there are times when already they are holding some orders they bought and they don't want to release, but they want to buy more. Say they show people the price are going down. People are chasing what? People are literally chasing moves, and people are selling. Market makers are buying, and then immediately they shift the zone with an engulfing candle. Why? Because they want people to be out of big loss immediately. Guys, this engulfing candle happens it's an intentional move. Why? Because most people are gonna be in a negative immediately. If you are, say maybe you entered here, okay, on this candle, and immediately you are at you use the bigger lot size, immediately you are at a minus $200. Are you gonna close the trade? No, you're gonna say, God, let them come back and I'll close at break even. Maybe if I'm minus $20, then I can afford to close. Okay, they know how people think. Those people are well organized. They have the best psychologists, or okay, they are the best. They know human behavior. They've studied human behavior. They receive the best training in the world, best training that money can buy. Okay, they receive the best training. Okay, they are well organized, they're well resourced, they're well financed, so they know how people behave and think. Okay, they know that immediately if you are at a very big loss, you're gonna say, hey, let prices come down, I'm not gonna close now. However, you will be forced to close as prices are going high, because if you can't close a minus $200, obviously if it goes to a minus $900, you're gonna say, oh no, you're gonna close and go out stressed. Okay, or else you're not gonna go out. You know what you're gonna do? You're gonna try to wait. You sold, right? And for you, obviously most guys, when they make up their mind that the prices have to go down, that prices are going down and they have to go down, what do? When you see this engulf, you are selling again, revenging, trying to make what you lost back quick. If you were forced to exit maybe here at a minus $900, obviously what are you gonna do? You're gonna try to prove that you are right, and you're gonna try to use a bigger lot size now so that you make back what you lost. And they don't give you profit, they allow you, you are happy. Now they allow you again, you are happy. Actually they close you because of this one, but they are gonna like create an opportunity for those who are actually revenging. There's always gonna be an opportunity for revenge trading. Okay, they're gonna show you. That's why they're using golf. That's why they use rare truck. They're gonna show you. They can even use pins just to show you that, oh, nah, you were right, and because you are so obsessed with the fact that you were right, you were not wrong. Markets are always wrong. You have to be right. You're gonna revenge and you're gonna end up losing more. So they know how humans behave. They know how we think. Okay, so this is why this engulfing candle carries with it a very, 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 very powerful psychology behind. When you understand the psychology behind all these things, you will cease from trying to wait for multiple confirmation. This is the right time, the right session for the pair to move. They are on the right day, the day 3. Okay, there is no need to wait for multiple confirmation or doubt. Okay, you buy here, you put your stop just below the head and shoulder. It's all up to you, or you put your stops right here. Okay, but put your stop at a place where if they are hit, you know that you were wrong. Okay, this is a very, very, very small stop. You see, for me it's roughly 20 pips. Okay, yes, 20 pips. Okay, but I wouldn't mind, okay, having more. And of course for me, yesterday I put them just below here. Okay, there were 20 something pips because it's on a day 3. Okay, I want to put them at a place where if I lose, it's fine. Yes, of course, I have a rule that says 25 and 20 pips maximum, but I'm fine putting them here because it's a day 3 and I know that if I lose, obviously I was wrong, and I don't open many trades a day. I select my pairs wisely. I have only maybe 2 pairs to trade a day, so if I lose on one, I have another pair. If there's no setup, that's the only trade I'm taking today. So if I lose, still it's fine. It's a very small stop loss, it's a very small loss. Okay, and I'm gonna go, once I enter, I'm gonna go to a smaller time frame to find more pullbacks so that I can enter for a continuation. Okay, for me, I placed it here. I didn't calculate the picks. I just placed it at the low so that if I'm wrong, I'm wrong, and if it closes me, it closes me. But I always use the rule of 20 pips for currencies and roughly 25 pips for metals and indices. But when it's perfect like this, I put it at the low because I understand that it's very important to put your stops at a place where if they are hit, obviously you know you were wrong, and if you know you are wrong, there's no need to try and revenge and prove that you were right on stuff. Okay, because the placing of the stop loss is very important. It determines if you're gonna revenge or if you're not gonna revenge. If you put your stop loss where you'll have peace if they are hit, then obviously you know this is the right session time. Okay, it's the right session time. I have a stop hunt, and okay, I have a nice pattern. I'm on day 3. There's no need to be scared, and I didn't take all this move back to the high. I just left a small trailer. I took the first take profit here. Okay, I told you what I do. I divide my lot size into 3, and then the first 2 parts actually take profit, and the other one I leave it for the move that is going up. So I took it the moment it came and hit the EMA on a 1 hour time frame. Okay, and then for the other one I projected expansions. Okay, for the other one I projected expansions. I took it from the low. This is the recent level I have, and body. Okay, and I took an expansion of 2. So the last 2 positions took profit here. Okay, because I always divide my lot size, and I'm gonna have that smallest part that is left, and okay, these 2 will go up, and one will the 2 will take profit early. The 2 took profit as I'm showing you. My 2 positions took profit when they hit the EMA. Okay, and another one took profit when they went up high. Okay, so that's how I managed my trade yesterday. Besides, I don't want to spend most of my time looking at the charts. Okay, so it was giving a nice day 2 continuation, but let's just wait. Maybe we'll get it, maybe we won't. But today I also have some pairs that I've selected yesterday, and I'll be observing them. Okay, and obviously this is not part of it unless it pulls us down to give us a day 2 continuation. Okay, so I know anything can still happen. These are the markets, but guys, these day 3s are the most easiest moves. And remember, there are pairs which performed well on a Wednesday, and for this one I didn't really select it on a Wednesday because obviously my issue with this pair was the fact here it did break out here. It did break out. So when it breaks out here, it gives me a problem. Okay, but on a weekly template, we were on a day 3, and they engulfed this level on a 1 hour time frame. Even on a smaller time frame, they gave a very nice entry. As you can see on a 15-minute time frame, they are up and they are down, and this was a stop hunt. Okay, it happened before the session. I don't trade before the session, and okay, so those are the things. So guys, when you are on a day 3, obviously don't mess around with it. Day 3s are gonna explode most of the days, so just understand the variation and understand day counts, and everything else will start making sense. Go put in the work and backtest, practice, and do your level best. Okay, do your level best. Okay, do your level best. Okay, because yes, I share 2 strategies, but when you understand, sometimes there are scalps you take, but obviously for now I just want you to understand this. Beside, this one was a very perfect one. It broke structure and then later it continued, but there was news here. I don't really want to be in the news, but since I was already in the move with a trailer, I don't mind if they come and close me. Obviously I don't mind with a trailer. Okay, so this for me was roughly, it was more than 70 pips yesterday, and obviously it went beyond 100 and something later for the small trailer that I left. So guys, this is the trade, or these are the kind of trades you should not miss. Okay, these are the trades you should not miss. Okay, on the playbook I put only the day threes, and I put all my rules as I trade them every day, but on this channel I've shared literally everything with you. So if you go and watch the videos, master them, and put in the hour, everything is gonna be way too easy for you. Okay, and for those who say they don't want long videos, if you want to learn trading in 5 minutes, well then be my guest, and welcome. Okay, so if you watch this video, please bookmark this video, watch it over and over again. It's gonna help you a lot. Thank you guys, I really appreciate you so much. Okay, I appreciate you. For those who are new, hit the like button, share and subscribe. Okay, because I have a lot of content that is meant to build and help you. I really appreciate you guys. Thank you a lot.